welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. What we'll also focus on is the IT bellwether TCS and what should be your investment strategy right ahead of the Q2 results that are likely to be announced right after the market hours today. Now, what is your expectation from here? What is it that's something that you should watch out for from the earnings, and how should you strategize your move in the entire IT sector based on TCS earnings? Everything we will discuss in detail with our guest joining in today in just a few minutes. But first up, a quick check on how the markets are doing at this point in time. Remember, the rebound of yesterday has also extended in today's trade, with the Nifty rallying now above 19,800 mark, 117 point of a jump being seen even today. A 0.6% of a surge. Of course, all the sectors are partying, right? You can see the Nifty Bank also supporting the market mood today. It's the Realty Index for the second day in a row that's up in trade. It's trading at a 15-year high, and 1.5% move can also be seen on the Nifty Realty today. The broader market's doing well as well. The small caps up by over 1% at this point in time. You also have the mid cap space that's up by about 0.8, 0.9% odd in trade today. Healthcare stocks coming back in action, 1% higher in trade. Metals are higher in trade. FMCG, auto, oil and gas, all the sectors barring slight weakness being seen on PSU banks after the move yesterday. Rest of the sectors are all up in trade. On the Nifty gaining action front, you do have stocks like Wipro that's up in trade, Grasim, Ultratech Cement, Dr. Reddy's, Hindustan Unilever and Cipla. All of these stocks are up in trade. So a lot of stocks from various baskets. You can see FMCG, cement, IT, pharma. All of these stocks are really buzzing in action today. Even on the broader market front, when we talk about the Nifty 500 basket, you have stocks like First Source Solutions up by 3.5%. BSE is higher in trade. Bikaji Foods is again moving up. ACC, APL Apollo, Adani Green, all of these stocks are moving higher in trade as well today. On the FNO action, it's Ramco Cements. That's one of the stocks that's up in trade, 4.3% higher. Wipro, Tata Chemicals, ACC, Ultratech Cement, these are the buzzing spaces as of now. So the cement pack is also pretty much in focus in today's trade too. A lot of stocks right here buzzing in action. So we will get down to the market move right here, but let's welcome our guest on the show. Mr. Kranti Batini joins in, the Director of Research at Wealth Mill Securities. Welcome, sir, and thank you so much for taking the time out for this discussion. First up, your quick thoughts on the markets. After the initial knee-jerk reaction, the markets have made a very smart recovery in yesterday's trade and the extension even today. Looks like the bulls have absolutely made peace with the war happening in Israel-Hamas. What's really happening, and why are markets taking the Gaza attack in stride?
Yes, actually, market have responded in a positive way. Last 2 days move in the market shown that Indian market is showing it once again its resilience. That was the reason we kept on telling the investors in your earlier show also. Whenever there is a dip on Indian market, that is the best time to buy and accumulate the chips in a staggered manner. The main reason, very clear, with respect to the Indian macros are concerned, we are quite strong with respect to the macros and growth. Look at the tax collection numbers. Okay, there is a complete tax due diligence is taking place, and the people are very prudent in terms of contributing to the growth of the economy. So there are many factors. The high definition indicators are turning very positive. Last 3 months, given the kind of consumption story that is emerging in Indian markets, even IMF also extended increased their growth prospect to with respect to the Indian economy is concerned. So all these factors are adding, and the main paramount thing for the Indian markets at this point of time, the liquidity. We have a strong liquidity. That's what we are watching in terms of the retail buying at every dip, the domestic institutional investors, and also the foreign portfolio investors also. On some days, they have been cherry picking some kind of different themes. Overall, there is a positive sentiment with respect to the Indian markets is concerned at this point of time. And of course, the global jitters, knee-jerk reactions, the geopolitical issues have been creating some kind of pressure on the top of the market. So markets are completely in a range bound right now. when there is a kind of any global events or negative events that are creating pressure, again, Indian market is rebounding at the bottom levels. So it's very good for the even for the delivery based traders also to enter in the market at the bottom of the levels and sell whenever it tops at this point of time. And for the long term investors, whenever there is a dip, they can accumulate the stocks for a medium to longer term is concerned. So overall, we need to wait and watch how the things are going to escalate, or things are going to, the geopolitical issues are going to happen in the next couple of weeks. And the joker in the pack right now, we should not ignore crude. Crude has been volatile at this point of time. One crucial thing, the packer in the pack in the joker in the pack is at this point of time is crude. We need to watch out how the crude is going to pan out in the next couple of weeks' time.
Mr. Batini, let's now focus on the big IT bellwether company TCS, which is going to be announcing its results, and this will kickstart the Q2 earnings season for us to understand, how have businesses really done in the previous 3 months as well. First up, we do remember that in the June quarter, TCS had reported subdued results. In fact, this was the slowest June quarter growth that TCS had reported in over a decade, if we exclude the COVID-19 period thereof. Now, Q2 is seasonally a strong quarter for the IT companies. What is your own expectation with respect to TCS earnings? And do you really expect TCS to show promise in a seasonally strong quarter, or is it going to be bogged down with several concerns and headwinds?
Actually, here the issue here with respect to the large cap IT stocks are concerned, one thing is clear: the US economy is showing its strength. It's moving from strength to strength. And US companies have been reporting good set of numbers, and the corporate profits in US also, S&P 500, and also the majority of the companies have been reporting strong earnings. But the apprehension with respect to the TCS and the majority of the large cap IT stocks is the forward guidance. How these companies are going to expand their IT budgets, and banking and financial services also, some extent it is under stress in the previous quarter. So that got moderated in the previous quarter. So we can expect some kind of resilience compared to the Q1 is concerned with respect to the large cap IT stocks at this point of time. But the issue here is how the companies are going to give the forward-looking guidance. That is extremely crucial because of the mixed trend that what we are getting from the US economy and the banking and financial services sector in US. It's giving a mixed feeling at this point of time. So the guidance from the company is more important than the current quarter results. Current quarter results, we can expect a mixed quarter results at this point of time. But I am looking forward for the order wins in the coming days, and also how the forward-looking guidance of the company going ahead.
Okay. The other important announcement that TCS is likely to make is with respect to the buyback. The street is penciling in somewhere around 18,000 odd crore rupees of a buyback. This will be the 5th buyback that TCS will be announcing. And also, when we talk about the size, this could be one of the biggest sizes that we've seen historically by TCS. What is the outlook on the overall acceptance ratio that you expect if the size is upwards of 18,000 crore rupees? How do you believe the street is going to be looking at in terms of the announcements when it comes to buyback?
Sakshi, the beauty of these large cap IT companies is concerned. Okay, in a challenging quarter also, they have been distributing the money to the investors, so the shareholders. The quantum of the buybacks they have been doing incredible. Of course, the main reason is Tata Sons also want to participate in these buybacks, and at a group level, they have the expansion plans in the other businesses, and TCS being a cash generator for the entire group. So the kind of buyback announcements do come for the group is concerned. So if we expect the buyback size of around somewhere between, as you mentioned, 18,000 at the lower end and 20,000 crores at the higher level. So we can expect 20,000 crores on an average with respect to the buyback size is concerned. But Sakshi, one thing is if you see the traction of a company like TCS in the past 20 years, it created humongous wealth for the investors in terms of the capital appreciation, in terms of the dividends, what they provided, and also in terms of the buyback is concerned. So I can see last time when we were interacting with the investors, when a company is there is a saying by Warren Buffett, when a company is giving buybacks, that's the company to hold on to, into their portfolio, or if the investors are participated in the buyback, they need to go and buy this company again. So
Okay.
the acceptance ratio with the given the size of 20,000 crores will be on a higher end. But my premise to the investors, if they are happy with the buyback announcements and the kind of money they are giving back to the investors, but it's not the stock to just tender the shares in the buyback and sit back and relax. It's a stock one can go back and buy the stock in the open market and to keep in their individual's portfolio for a longer term perspective. Of course, there will be some kind of headwinds in the cycle, the way in the business cycle. There will be some kind of challenges in the business cycles with respect to the growth of the global economy is concerned. But on a longer term perspective, on a longer term note, these companies have been rewarded the long term investors.
So over here also, would you be advising investors to participate in the buyback?
Given the kind of challenges, what we can see in the medium to short term, if the investors want to participate in the buyback, they can participate and take the gains given by the buyback offer, and they can come back and buy the shares in the open market again.
Okay, so they can take the benefit of the higher gains as well as buy afresh in the open market again. That is the advice coming in. And ahead of earnings, would the suggestion be same? Should one take positions ahead of earnings this time around? Because we are now seeing TCS trade close to its 52-week high levels. It had touched that level of 3680 during this week. Right now, it's trading somewhere around 3650 odd levels, 3612 odd levels right now. Half odd percent of a decline can be seen right ahead of the earnings. So some nervousness creeping in. Is it a good entry point for investors?
Sakshi, just keeping in the view of the earnings is concerned, just building up a position is more about a speculative perspective. Just wait the earnings, understand the market commentary. If the person want to, the individual is investor, just wait for the commentary how things are that's going to pan out, and what kind of guidance the company is going to give. Then they can take the position. But for an investment perspective is concerned, but I'm not here to go and buy jump just right now. Just wait for one trading day. We can get more clarity to take the positions.
Okay, understood that as far as the TCS earnings are concerned. But I'll take this discussion beyond TCS as well. On the overall IT sector, what is your own thought this time around on the earnings season? Where exactly would you be bullish? Because we've seen the mid-cap IT firms really outperform over the last few months over the large caps. Is that the space that will also likely to outperform in the Q2 earnings space? And therefore, should one really take more positions in the mid-cap IT basket versus large caps?
Mid-cap IT space last quarter actually is a complete surprise. They come up very well, and even the stock prices also they outperformed when compared to the large cap IT space is concerned. At this point of time, what I can conceive is the mid-cap IT space is by and large they are fully priced in, but there will be some different pockets. It's very stock specific with respect to the mid-cap IT is concerned. When we interact with the majority of the mid and small cap IT companies are concerned, they are quite specific. It's not a systematic risk what we are foreseeing. What they are foreseeing is it's more about the industry specific and the domain they operate and the geography they operate. That is the reason they are quite bullish about with respect to the individual company prospects are concerned. While coming to the large cap IT is concerned, of course, they have done moderately well due to the markets have been doing very good. They bottomed out, and they have been resilient in these turbulent times also. So for a large cap IT space is concerned, Sakshi, it is more about the long-term perspective of the large cap IT space because of the strong business models they have and also the strong cash flows the large cap IT stocks they offer. But mid and small cap IT space is concerned, right now it is more about stock specific at this point of time rather than discussing about the as a sector is concerned. By and large, mid cap IT companies are concerned, they are fully priced in at this point of time.
Okay, got that as well. Well, all right. Many thanks then, Mr. Patini, for being with us on the show and discussing all these insights about the IT sector earnings, especially when it comes to TCS, the expectations around the buyback as well, and the strategy investors should adopt. Good to speak with you, and thank you so much for taking the time out. All right, 100 points of a jump can still be seen on the Nifty, but it's slightly come off from the highest point of the day. You can see it's slipping below the 19,800 mark now, although half odd percent still continues to be held on when we talk about the move that we are seeing on the overall market scenario. We'll continue to track the momentum for you through the trading session and help you understand more about where exactly is the money flow going to as far as the markets are concerned right ahead of the Q2 earnings season. So stay tuned on to Business Today Television. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms like Facebook, Twitter, LinkedIn and also Instagram.